Hello everyone. US equities closed with solid gains last week, but with over 90% of earnings out and markets at record highs, investors are wondering, will elevated valuations spark rotation, or is betting against tax resilience still a losing game? Let's check the technicals on the 4-hour chart for the US Tech 100. We can see the first uptrend channel from mid-July broke hard. It sent prices down to 2,600 support. From there, we could see some dip buyers stepping in, forming a new up channel. At the end of it, we saw 6 days of fresh highs. It topped at 23,967, just shy of 24,000. And if you extend the first channel, like I'm doing here, those highs line up perfectly with its lows. That's a sharp technical echo. Now, since then, the second up channel has cracked too, less violently, with 23,660 now acting as the key local support. So now the setup above 23,660, bulls can still chase 23,800, and another shot is possible at 24,000. But as long as prices trade below the uptrend, consolidation or profit taking is supported by the technicals. Break lower opens to 23,400 with 23,000 as the major support.